The end of physical currency. If cash were completely abolished, society would be forced to rely entirely on digital payment methods. Traditional paper money and coins would become relics of the past, with all transactions taking place electronically. This shift would impact everything from daily purchases to how individuals manage their finances, leading to a more streamlined yet potentially less inclusive financial system. Increased dependence on digital payments. With no cash in circulation, digital payment systems like credit cards, mobile wallets, and cryptocurrency would become essential for all transactions. This would make financial interactions faster and more efficient but also place more control in the hands of banks and tech companies. The ease of use could benefit consumers, but it would also create new challenges, particularly for those not comfortable with technology. Privacy concerns and surveillance. One significant drawback of a cashless society is the potential loss of privacy. Digital payments are traceable, meaning every transaction can be monitored, analyzed, and stored. This could lead to a rise in surveillance, with governments and corporations having more access to people's financial behaviors and spending patterns, raising concerns about data security and personal freedoms. Impact on people without bank accounts. In a cashless world, people without access to bank accounts or digital payment options would be at a severe disadvantage. Those in poverty, elderly individuals, or residents of rural areas with limited internet access could struggle to participate fully in society. This digital divide could widen social inequalities, leaving vulnerable populations further marginalized. Security and fraud risks. While digital payments offer convenience, they also introduce new risks. Cybercrime and fraud could increase as hackers target financial systems and personal accounts. The loss of cash could make it harder for individuals to protect their wealth from theft, as digital transactions are often irreversible. Robust cybersecurity measures would become even more critical in ensuring the safety of the digital economy. Reduction in informal economies. Cash is a major enabler of the informal economy, where transactions are unreported and often untaxed. The elimination of cash would make it harder for businesses and individuals to operate off the books. While this could lead to greater tax compliance and economic transparency, it might also negatively affect sectors that rely on cash, such as street vendors and freelancers in certain industries. Easier tracking of economic activity. A cashless society would make it easier for governments to track economic activity, monitor spending patterns, and collect taxes. This could lead to more efficient revenue collection and help detect fraudulent activities. However, the loss of privacy in such an environment could spark debates about how much control the state should have over personal financial information. Greater convenience for consumers. For many consumers, a cashless world would offer unprecedented convenience. Digital payments can be made with the swipe of a card or tap of a smartphone, removing the need to carry physical money. Online shopping, peer-to-peer transfers, and bill payments would all be simplified, making financial transactions more seamless and accessible to the majority of the population. Potential for financial innovation. Without cash, the financial landscape would likely undergo significant innovation. New digital currencies, payment systems, and banking platforms could emerge to meet the demand for secure, easy-to-use financial tools. Technologies like blockchain, biometrics, and AI-driven finance could reshape the way people interact with money, potentially creating new opportunities for financial inclusion and efficiency. A shift in consumer behavior. The abolition of cash could alter consumer spending habits. With physical money no longer available, people may become more aware of their spending due to the transparency of digital transactions. This could encourage more responsible financial behaviors or alternatively, prompt higher levels of spending due to the ease of purchasing without the tactile reminder of cash leaving their hands. Societal adjustment and resistance. The complete abolition of cash would likely face resistance, especially from those who prefer the security and anonymity that cash provides. Older generations, those in rural areas, and individuals who are wary of technology may struggle to adapt. As society transitions to a fully digital system, efforts would need to be made to address these concerns and ensure that the shift is inclusive and equitable for all.